Today we're talking about tax reform, the real estate market, and how would that impact you. I'm Randall Dolland, a licensed real estate agent, and I'm here to help you navigate the world of New York City's real estate market. So today we're here with Josue Rivera from Rivera and Montes PLLC. He's a CPA and partner with the company. And today we're going to be discussing more about the tax reforms that's just been passed through the Senate and Congress. And how does it affect you, the home buyer here in New York City? So, Josue, there's a lot happening right now in Congress, and of course a lot of home buyers are trying to figure out, well, how does a new proposed, or the tax reform that's just passed, how is it going to affect them when they're in the market looking for a home, or even the investors? It's a lot of new proposals and people are sort of getting a little bit on edge, so happy to have you here to sort of break that down for us.
Yes, thank you, Randall. Good morning. As you mentioned, there has been two separate bills that have been approved, one by the House and one by the Senate. They have a lot of common ground, but they have some differences between them, and among them are some that it's going to impact the buyers
Right.
and sellers of real estate property,
Right.
not only in New York but in the whole nation. And I'm going to talk here about the salient points of that legislation. And I think that just to start, I mean, there are some impact that, on the itemized deduction that taxpayers have when they calculate their taxable income to
Right.
arrive at the tax that they're going to pay every year. And one of the changes in the legislation is that the House proposal is capping the amount of home mortgage interest deduction that they can claim in their tax return. So let me just explain that. So when a taxpayer is calculating its taxable income, it can take either the standard or the itemized deduction.
Right.
Whatever is higher, whichever is higher, is the one that is being claimed in the tax return. One of the most common and largest amount of itemized deductions that taxpayer can claim is the interest deduction on their mortgage.
Right.
So the House proposal is capping the amount of the loan. The loans currently, the loans up to $1 million, the interest expense on those loans are allowed as a deduction, as an itemized deduction. The House is currently capping that amount to limit a new home equity loan up to $500,000.
$500,000, wow. So the half.
Yes. Not only that, the House proposal is also eliminating the interest expense on second mortgages.
Right.
Okay. Currently, the Senate proposal does not touch this provision, so it allows the deduction to stay without limitations.
So now you're talking about half of that is being. So in other words, instead of up to $1 million, you said, instead of paying $40,000, you're down to 20.
Yes, on new mortgage.
New mortgages.
Yes, so
Okay.
mortgages after the legislation is approved. Right now, I think it's November 2.
Right.
So, but we have to see what the final legislation looks like. But yes, the limits, it's on new mortgages.
But these are just things like to just sort of, I guess, keep in mind as we're looking at what could potentially happen.
Oh,
because of course
definitely.
It's going to affect you.
Definitely, it's going to
Your
impact the amount of
affordability.
deduction. Yes,
Yeah.
yes. One other thing about the interest deduction is the home equity loans. The Senate proposal is eliminating the interest deduction on home equity loans. Currently, home equity loans of up to $100,000, the interest deductions on those are deductible for tax purposes as an itemized deductions as well. So I think that this could have the impact of making homeowners, or could impact the cost of buying a property, could increase the cost of buying a property going forward, and that could impact the market.
And not necessarily just because of the price, but it's affordability.
Yes. One other proposal is to eliminate the property taxes, the state property taxes. The Senate proposal currently eliminates the state property tax deduction, which is another itemized deduction. The House proposal limits the amount of property taxes up to $10,000. So that's another change.
Right.
That could impact those states with high property taxes, such as New York, the tri-state area, New York, New Jersey, and Connecticut could be impacted by this legislation. And third biggest point is the tax break on the gain on sale of property. Currently, there is, if you sell your principal property, there is an exemption of $250,000 for single taxpayers and $500,000 for married paid final jointly tax return. So The proposals currently votes for changing the period of time in which you have to own or live in that property.
Right.
So currently, in order to claim this deduction or this exemption, you have to live 2 out of the last 5 years in your house. The new proposal changes it to live 5 of the last 8 years in the principal residence. And that's a big change as well.
Yeah, that's huge. So, in other words, you're almost better off buying it now than next year if this bill actually passes.
Yes, I
Goes
think.
all the way through.
Well,
Let's get signed into law.
we have to always. I mean, we have to take everything into context,
course.
right? So, all these proposals are just proposals. We don't know what
Correct.
the final legislation
Correct.
is going to look like, and also we have to keep in mind that even though we have these changes, the standard deductions have been doubled. So, from a single taxpayer, from 6,000, it's being proposed to increase to 12,000, and for married filing jointly tax returns, it's 12,000 currently, and they're proposing to increase it to 24,000. So you have to play with your math and do the calculation of what's better off for you.
Absolutely.
I think, again, we don't know how this is going to look like. I think this, when you buy a house, it's a very personal decision, a very
Absolutely.
big decision.
Yeah.
So you have to sit down and think about your finances.
Correct.
Whether you can actually afford buying a new house, right? And think and take all these variables into consideration to determine what works best for you.
For the first house and second home.
Yes. I mean, I just thought that even the house proposal is just eliminating the interest expense
exactly.
on second mortgage.
So even for investors, I mean, there's even some talk about taking the deductions up front for the depreciation.
Yes, there's also a proposal to accelerate deductions when you acquire
Right.
property. And again, I think that that's something that it depends on the investor and what their financial situation is, how they plan to acquire these properties. And that's where you need to talk to your tax planners, your financial advisors to
Right.
determine what works better for your company.
Exactly. So yeah, I mean, when you do your tax expert, so you pretty much would lay out a plan of doing it. It's not just about the mortgage rate or what they calculate for you, but it's sort of painting the entire picture. It's the entirety of what you could actually afford.
Yes, Randall. I think that our role as advisors is to do what's better for our clients.
Correct.
Right? And advise them and just explain to them the alternatives that are available to them so
Right.
that they themselves can sit down and, along with its advisor, can plan and decide on what's best for them. We partner with people like you, with real estate agents, to make sure that clients make the best decisions that they can when they go out to acquire these properties.
Absolutely, and that's why you got people like yourself that are professional and experts at what you do. So we can say, hey, if you want to really think about this, especially for like the people who are just getting into the market for the first time and they want to understand all the intricacies, because of course it's a big decision.
Yes,
It's a massive decision, and not just from what your mortgage rate is going to be, but you need to sort of make an entire plan, because this is going to affect not just you right now, but your family going forward. If you do have a family now or plan to have a family in the future. So yeah, I mean, is there anything else that we should keep in mind again when we're out there in the market or someone just getting started?
Well, I think when you think about buying your property, your principal property, that is a very big decision. And I think, me being a property owner as well, I like to think, why can I afford? Because I think that maybe the biggest mistake that homeowners or people that wants to go out and buy a property make is they overextend themselves. They don't think, because when you go out to request a mortgage, the mortgage company is just going to look at your interest to debt rate. I'm sorry, income to debt rate.
Yeah.
But you have to keep in mind that maybe because you were approved for a certain mortgage, you still have to consider not only your debts, right? It's what are your income every month and what are your expenses, because maybe you have expenses every month that are not debt, because
Yeah.
it's not a fixed fee that you don't pay the car, but you still have to pay your college tuition for your kids, right? And you have to go out to have lunch every day. So I think my biggest advice is people need to sit down and do a budget to really determine what they can really afford when they go out about buying these properties.
Right.
And also they need to consider now this new proposal, because that could, at the end of the day,
Exactly.
provide limitations on the amount of cash flow, free cash flow that these homeowners or people that are starting to think about buying a property will have going forward.
Exactly. So yes, there's a lot to
Consider.
keep in mind. Exactly, and we're going to stay on top of this as the tax reforms change. and sit down with you a few more times and keep you guys updated as to exactly what's happening in the market as it deals with tax reform and how does that impact you, the clients. So Jose, thanks again, and we'll be in touch again with a few more.
Yeah, we have our
All right.
pleasure, Randall. Thank you.
Perfect. Thank you. Thank you.
Thank you for viewing. Visit my website for more information or subscribe to my YouTube channel.